Hey, everybody, we have a brand new week starting May 13th. The Market Update Desk with Scott Riley, brought to you by Mortgage One. Hope everybody had a fantastic Mother's Day on Sunday. They get to spend some quality time with your mom, family, friends. This week, we start off with a real busy week. Last week, senior analyst Mr. Gibson was very happy that he got to take a little bit of break with the lack of data and market moving information that was coming out last week. So he appreciated that. This week, we headline stuff with an interesting article that the New York Times had that they actually emailed out to subscribers, showed that there was a benefit of almost $130,000 over a 10-year time period if you rented versus purchased. Very interesting. When you drive into their calculator and information, they drastically underestimate home appreciation. They underestimate rental cost. For example, they use the example of a $500,000 home equivalent to a $2,000 a month rent. If you can in West Michigan find a $500,000 house to rent for $2,000, I want to know who you contacted to find that house. That, along with overrepresented repairs, overrepresented closing cost, really skewed this information to make headlines click for what they really wanted. Now, going into that calculator, we worked on it over the weekend. If you went in and put an average of 5% appreciation, which is really low, correct closing cost, actually probably even a little bit over expected closing cost, correct rental increases of 4.5%, which is under what we're seeing in CPI and PCE of 5.5%, correct closing cost, that skews those numbers and actually shows a little over $200,000 gain over 10 years versus a loss for owning. So their numbers are really designed to have clicks. So information is power. So you need to understand what that is. And that's why I wanted to go over that this morning with you. We got the University of Michigan consumer sentiment for May. And it was definitely a negative and an eye opener. It showed that consumer confidence dropped sharply from 77.2 to 67.4, well below the estimates of 76.2. In fact, it's the weakest reading in 6 months. And there was also a big drop in spending intentions across the board. And we went over that last week about the consumer being pressured and starting to pull back. 1-year inflation expectation reports within the report rose from 3.2% to 3.5%, while the longer term expectations for rent rose 0.1% to 3.1%. A big factor that the surveyors are giving for that is higher gasoline prices, higher utility prices. That's weighing heavily on the inflation expectations. The employment component, we've been talking about a lot of stuff with employment, fell by a whopping 15 points, and that measures the softest read since August of 2011. Almost 40% of consumers now anticipate that unemployment rates will rise in the future, right, going from 8 points on the previous report. So there's a big increase in the expectations of inflation and less employment opportunities. The income component was also down. In fact, it was down 6 points to the lowest reading since 2014, not including COVID. So we got a lot of factors going in there and what the consumer is really feeling versus what we're being told in the media and BLS and politics. Tomorrow, we get the Producer Price Index, PPI. The headline number is expected to come in at a rise of 0.3%. And that's going to keep the headline number at about 2.4% year over year. So we're expecting that year over year to be flat. Core producer price inflation is expected to rise 0.2%, and that's expected to rise PPI year over year from 2.1 to 2.2%. Now, this also is a little bit of a concern because a lot of that data is going to flow into PCE that we get the end of the month. So we're trying to stay on top of all that. Big week. We get tomorrow, we get small business optimism. producer price index, as we talked about. Wednesday is mortgage applications. Then we get CPI, consumer price inflation index, and then retail sales and housing market index. Thursday, we get unemployment numbers, and wow, maybe BLS will again show us real numbers. That's going to be interesting to see. And then housing starts, permits, and also completions. So lots going on this week as we go through everything. It's going to be real interesting by the time we get to the end of the week if we can get some movement. Now, what's really cool is the mortgage-backed security trading area has gone to a point we've hit the 50-day moving average 3 different times, haven't been able to break above it. But if we get a little bit of momentum with inflation data, we might just be able to push through that and get a little bit better on rates. Also, the 10-year bond has been moving down on the 200-day moving average. So hopefully we can get a little bit of momentum there too. So it's a start to the week. We think we're going to have a net positive by the end of the week. We'll keep you updated. Look to us for your market moving information in West Michigan, 616-293-2189. Thanks so much.